Michael Saylor had some spicy comments during his Q&A at Bitcoin 2025 yesterday. And just like that, one of the most heated debates in Bitcoin is back. Is it just a store of value, or does it need to become a global medium of exchange? Jack Dorsey says Bitcoin fails if it stays a store of value. David Marcus is building global payments on top of it. And Lyn Alden weighs in on monetization, timing, and scale. So who's right? Is Bitcoin confused? Or is the market confused about Bitcoin? Today, we take a closer look at the fault lines forming inside the movement and answer the question, is Bitcoin missing its moment, or is it finally stepping into what it's always meant to be? The store of value versus medium of exchange debate has been flaring up a lot lately. It all started with Jack Dorsey in this clip from the 21 in 21 podcast earlier this month.
So let's fast forward to the future, and Bitcoin has failed. How did it fail?
I think it fails through irrelevance. It fails to be relevant to people on a daily basis. If it just ends up being store value and nothing more, I don't think it gains relevance at all. I think it has to be payments for it to be relevant on the everyday. Otherwise, it's just something you buy and forget and only use in emergency situations or when you want to get liquid again. I think if it doesn't transition to payments and find that everyday use case, it just gets increasingly irrelevant. And that's failure to me.
The comments sparked a wave of discourse, especially given Jack's deep roots in Bitcoin and his work in Blocks Lightning development. Then, on Bitcoin Pizza Day last week, the holiday that commemorates Bitcoin's first real-world transaction, Michael Saylor made a controversial post on X. Pay with dollars, eat the pizza, keep the Bitcoin. Bitcoiners lit up, some applauding the nod to never sell your Bitcoin, others accusing Saylor of missing the point entirely. But yesterday, at the Bitcoin 2025 conference, Saylor addressed the debate head-on. What he said may change how you see the entire argument. We'll play that clip in full, but first let's step back a bit. The mainstream assumption is that Bitcoin needs to be either a store of value or a payment system, that it can't be both. With some even repeatedly making the point that Bitcoin has outright failed as a medium of exchange, and thus it's failed in its original mission. But what if that's a false choice? Lyn Alden recently broke it down in Swan's latest free webinar. Her take? It's all about timing and scale.
So I think it's both because I think it's money. But like you, I think that it's like the order matters. So I think at scale, and as we've seen, large scale store of value usage comes before large scale medium of exchange usage. And that's actually not the case for small scale usage. On the small scale, medium of exchange arguably came first for Bitcoin. Like WikiLeaks used it as like a payment donation mechanism back when it barely had a price, for example. And so it doesn't, like, things that are used for more of a small permissionless scale are not always the same order of things that happen in a big scale. There's also network effects involved, which is that generally speaking, it's up against the dollar, which is a very liquid market, obviously globally, and then it's up against other liquid fiat currencies for any sort of given jurisdiction. And generally speaking, people's incomes are denominated in a fiat currency. Their liabilities and monthly expenses are denominated in a fiat currency. And that's what they're benchmarking to and trying to manage volatility around to some degree when they're not thinking of long-term investments like stocks or gold or Bitcoin or whatever the case may be. So for working capital usage, it's natural that Bitcoin's not the first asset that most people reach to unless they're like way deep into the Bitcoin ecosystem, making a deliberate effort to be on a Bitcoin standard.
That's the key. Bitcoin already functions as a medium of exchange. You can send it globally 24/7 with finality and zero permission. That's a fact. The question is, do people need it for payments right now? And are they incentivized to use it that way? David Marcus, CEO of Lightspark, explained this clearly on CNBC this morning.
No, I think there's so much room to go from here because Bitcoin is becoming mainstream. It's becoming really the true digital gold that we've all been talking about for a while. But now it's actually happening, and people care.
But you've always talked about also trying to make it a payment system.
Yes.
Like actually buy stuff with it.
Not necessarily with Bitcoin to unit of accounts, but build a real-time settlement network on top of Bitcoin.
Which is what your company does.
Yes.
So the question is, when does that take off?
Well, it's taking off right now. We're having very large digital banks coming onto the network. We have Nubank that has 100 million customers in Latin America. We have Revolut coming on. We'll make announcements soon about U.S. banks coming on as well, and other large wallets that are coming onto the network. So we're live in 70 countries, and you can move any currency to any currency in real time 24/7 on a weekend with Bitcoin in the middle. So it's happening.
Why would a stablecoin based on the dollar not supplant the idea that Bitcoin will be used for frictionless transactions?
So people actually get really confused with stablecoins because they think it's both a digital dollar and a payment network. And it's only the former, it's not the latter. And so the way we see the world is we're very asset agnostic at Lightspark. So you can move fiat currency, you can send dollars to someone in Mexico receiving Mexican peso, or you can move stablecoins on top of Bitcoin. And we think that that is actually the best combination.
On top of Bitcoin, not on top of the dollar.
I mean, no, the stablecoin is a dollar stablecoin, but like the network is actually, that allows those stablecoins to settle is actually Bitcoin.
In other words, Bitcoin is the settlement network, whether people realize it or not. Let's break this down a bit more. Stablecoins are essentially tokenized fiat. They make dollars portable and programmable, especially across borders. But they don't have their own native settlement layer. They're not a new payment network. And that's where Bitcoin comes in. When stablecoins move across Lightning or even on-chain systems that use Bitcoin for settlement, they're relying on Bitcoin as the final trust layer. In other words, stablecoins are dollar-denominated vessels, but Bitcoin is still the rails they run on. So while stablecoins absolutely extend the reach of the dollar as a medium of exchange, they also deepen Bitcoin's role as a settlement network. And that's the paradox. Stablecoins may prolong the dollar's global dominance, but they also entrench Bitcoin deeper into the monetary stack. They help more people transact in fiat today, while simultaneously pushing more settlement to Bitcoin. This is why you're likely to see both systems live alongside each other for years to come, especially with the Trump administration moving strongly in the direction of favorable stablecoin legislation. Bitcoin doesn't need to replace the dollar tomorrow. In fact, the longer the dollar remains dominant, the more time Bitcoin has to quietly solidify its role as the base layer. It's not a competition, it's a convergence. For now. And it goes deeper than that. At Bitcoin 2025, something extraordinary was just announced, and it may end up being the most important news of the entire conference. The team behind the C=Lightning routing node revealed they're earning 9.7 APR on their Bitcoin liquidity, all while holding the keys the entire time. Let that sink in. That's non-custodial Bitcoin native yield, based not on interest rates or lending risk, but on actual payment activity, economic throughput on the Lightning network. So if you're a corporate treasury holding 1,000 Bitcoin, this unlocks the possibility of earning $100 million a year just by powering a global payment network. A real yield on real Bitcoin, earned by real utility. This could be a turning point, because it's not just about saving Bitcoin or spending it, it's about putting your capital to work inside the protocol, with no counterparty risk, no token schemes, and no centralized middlemen. Stay tuned to this development, because this may be the clearest bridge yet between the store of value thesis and Bitcoin's future as global money. So if you're a high net worth investor trying to make sense of Bitcoin's monetary evolution, not just its price swings, you need a team that understands the long game. And that's where Swan Private comes in. From estate planning to trust structures and multi-generational custody, Swan Private is helping families and institutions take Bitcoin seriously and build generational wealth. Head to swan.com/private to start your conversation today. Lyn Alden in this clip again gets to the heart of the problems Bitcoin is solving for right now.
So I think that it's natural that until Bitcoin is far larger, more liquid, more people are holding it, and this gradual increase of Bitcoin kind of becoming part of the financial system, that it makes sense that medium of exchange usage will probably be somewhat limited, with the exception for people that, one, are deliberately doing it out of principle, or two, people that are directly benefiting from its permissionless aspects. For example, in a cross-border context, like anyone who sends international wires and runs into headaches there, or anyone getting debanked, or anyone facing issues like that, they're more in the prime target to switch to Bitcoin earlier because it's solving a problem earlier. Whereas people who don't wake up every day and have a payment issue, but they do wake up and wonder, how can I store value for 5-10 years? There's more people in, say, the Western world or the developed world that have that latter problem. And that's why I think that at scale has come first and will probably continue to come first, but it doesn't mean that medium of exchange is impaired anyway. And often they don't compete with each other. Like often one benefits the other rather than detract from the other.
Bitcoin is still monetizing. That means its purchasing power is still rising rapidly. And when something is appreciating 100% year over year, who wants to spend it? This isn't a bug, it's the design. Over time, as volatility drops and adoption grows, people will start treating Bitcoin as money, but only after it's secured its role as savings technology. Merchants will adopt Bitcoin when they want Bitcoin, not before. You can't force this transition with apps and point-of-sale terminals. It's based on demand, and we are getting there gradually over time. So now let's come back to Michael Saylor. His tweet may have stirred controversy, but his comments in Vegas yesterday laid out the full vision.
Michael, do you see Bitcoin starting as a store of value and eventually becoming a global currency like other forms of money have in the past?
I think if you read the history of the Rothschilds, the greatest bankers of the 19th century, they had a network. The Rothschild banks were the network. The primary asset, capital asset that traded was sovereign debt. They were trading UK debt and French debt and German debt, par value 100, and they moved those instruments, bearer bonds, around very rapidly. And that's how the entire banking network worked in the 19th century. And then when they did cash settlement, you know what cash settlement meant? Cash settlement for the Rothschilds in the 19th century. But I bring this up because Bitcoin's a peer-to-peer cash system, right? And all these people, they're always tweeting at me like, you don't understand what peer-to-peer cash is. Okay? When the Rothschilds cash settled a bearer bond transaction in the 19th century, that meant they traded the bonds for gold bullion or gold coin. And so cash meant gold. It meant metallic money, either in bullion form or in coin form. But even then, gold was too slow and too cumbersome to settle very frequently. And so there was a fiat currency, these bonds, trading over the cash system in the gold standard all through the century. And I think it's important because if you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from $1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit. When people cash settle, the settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yes, gold. But what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st century? Yes. What will circulate? Every form of credit of every credit-worthy counterparty, and then on top of that, equity. Layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears. I don't see a world where it needs to disappear. And so I see a world where there are many types of assets, but the king apex asset, the root asset, which everything else is settled on or everything else is oriented to, the center of gravity of the financial universe of the 21st century emerging is Bitcoin. Just like, that falls toward the center of gravity, which is the middle of the earth, and none of you have been there. That doesn't mean that it doesn't control everybody. Everything will be oriented in a frame of reference.
All right.
This is so much bigger than buying coffee. Bitcoin is becoming the center of gravity for the entire financial system. Just like gold settled sovereign debt in the 19th century, Bitcoin will settle value globally in the 21st. So is Bitcoin a store of value or a medium of exchange? The simple answer is that it's both. And it already works as both right now, but it's growing into the role in stages. And the order matters. What many critics miss is that Bitcoin isn't confused about what it is. We are. The amazing thing about Bitcoin is that it already can be used for payments, but it doesn't have to be. And that freedom is the whole point. This isn't a crisis of identity. It's a revolution in motion. And if you understand this revolution, you won't want to miss two of the most important Bitcoin events happening this year. BTC Prague is coming up in June, and it's Europe's premier Bitcoin-only conference, gathering thinkers, builders, and leaders from around the world. For more info and tickets, visit btcprague.com. And back in the US, this September, BTC in DC is bringing Bitcoiners to the heart of Washington to help shape policy and signal strength. Visit btcindc.com for more info. And a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So do you think Bitcoin needs to be used for payments to succeed? Does it fail if it stays a savings technology? And how do you personally use it? Do you spend it, save it, or both? I'd love to hear your thoughts on this, so drop a comment below, like this video, share it with a friend, and subscribe to the channel for more content like this. And as always, stay humble, keep stacking, and trust the process. Thanks for watching. TikTok next block.